down, which I hope for the U.S. people as a Canadian does not happen, because I think they've got enough problems down there. It would be a joke and would be devastating. So hopefully the politicians can get it together enough to do what's right for the people. One of the stories that came out this week, we do have it in our newsletter, John Embry writing and saying gold and silver must holding in the times that we live in. Supply becomes tighter and fueling of inflation continues. You can read the story in our newsletter. If you'd like to receive our newsletter free of charge, we send it out by email every week. The telephone number, 1-866-623-2002 to get your name on the list, 1-866-623-2002. We know that you're busy, and when we put this together, we do it in a way where you could really go through it in a matter of 10, 15 minutes. But if you wanted to delve further, you could spend hours. And you should get this on a weekly basis to be up to date as to what Harold and I are seeing and reading. And this is the companion to our radio show, so we encourage you to get it. It is absolutely free. The telephone number, 1-866-623-2002. John Embry summarized in this article, and he talks about hyperinflation, a concern. He says, I can't sufficiently emphasize how important it is that both individuals and institutions in North America expose themselves to gold and silver, increase their exposure. And he says, I suspect the upcoming period will be much like the 70s, when those who had large commitments to precious metals saw their real wealth rise dramatically in comparison to those who didn't own the sector. Interesting quote from Robert Mundell, a Nobel Prize-winning economist that I put in the newsletter. He said, we are living in the worst monetary instability in the last 3,000 years. The prospect for precious metals has seldom been more promising. And Harold, I think a lot of people are waking up to that fact. You just see what happened this week with Portugal asking for a bailout, joining Greece and Ireland. And I don't think they will be the last country that will need a bailout. In fact, Richard Fisher, who is the Dallas Fed Reserve President, said, according to our calculations at the Dallas Fed, the unfunded debt of Social Security and Medicare in the United States combined has now reached $104 trillion with a T, in discounted present value. And while much attention in recent years has been devoted to Social Security in the United States, the lion's share of total entitlements shortfall, nearly $90 trillion, actually comes from Medicare and Medicaid. So think about it. They have a debt right now of around $14.5 trillion. They're going to have to agree to raise the debt ceiling at some point. But looking out further down the road, they have debt $104 trillion. And Harold, those numbers are simply astronomical. You see it on a federal level in the United States, a state level, a city level. San Francisco, there was an article we had in our newsletter a couple of weeks ago where they will not be able to meet their obligations. The numbers do not work. That is the crisis of the future that will send the U.S. dollar down a lot further. And Harold, obviously, we believe when you add in inflation, precious metals will continue to do very well for a long period of time.
You bet, Randy. You know, the thing is that if you don't learn from history, history always repeats itself. I've been through these markets before. I traded the markets back in 1979 and 80, and again, I kept very, very close notes. So when we started the show 10 years ago, and again, I saw certain things happening that reminded me of the early 70s, that's when we started to bring this to our Canadian clients. And again, fortunately, not only did the markets go our way, but many of our listeners became clients and are sitting beautifully right now in gold and silver. So again, we do anticipate that this will continue very strong. This is nowhere near over. And again, we do believe that we're going to get a strong close to the market by the end of this year. Again, so far silver's up over 25% for the year so far. Tell me any other market that has returned 25% in the first 3 months of the year. Again, I think these markets are going to go substantially higher. The other thing about silver is that not only does it respond to financial crisis, but it's also an industrial metal used in computers and in medical and in photography and in almost every single thing that we do, and there is a major shortage of silver. So when you've got a supply and demand situation situation on top of the fact that you've got, worldwide financial chaos. Silver is probably, of all the metals, the best investment that you can make. We also love the palladium market. When we brought palladium to our listeners many years ago, most people didn't even know what palladium was. However, palladium, when we recommended it, was at $170 an ounce. It's now at $804 an ounce. So again, congratulations to all our Canadian clients and listeners that got into the metals markets and the hard asset market, because that's your only salvation in these type of financial situations. Again, we have no control over what the governments do. So the bottom line is that you really need to take these situations into your own hand. And if you sit back and listen to most financial advisors, they totally miss the boat. They didn't tell their clients about gold and silver back when it was at the lower levels. In fact, they tend to fight us every step of the way. That's why I say 90% of the money is made by 10% of the people, because only 10% of the people are invested in the right markets at this particular time. So again, this is in no way, shape, or form over. We haven't even started to deal with inflation. We're just starting to deal with that now, and that's why we believe that silver will ultimately be a triple-digit number of between $100 to $150 an ounce.
And I remember, actually, this was quite a few years back. Our show runs on AM 640 in Toronto, 630 CHED in Edmonton. And I guess there was another show that used to come on after us and make fun of us and laugh at us and said we were crazy in relation to precious metals. That was in Toronto. And I wonder if those guys are going to apologize, because if they're listening, we're ready for the apology, guys, anytime. 1-866-623-2002, the telephone number to invest in precious metals. The only company that Harold recommends is Worldwide Precious Metals out of Vancouver. Their website, wwpmc.com. wwpmc.com. The telephone number, 1-866-623-2002. And when I mention the apology, I don't do it in an arrogant way or a head-bloated way. I'm very humbled about what's happening, trust me. But, I do remember the people that were against this, and that was their right. But by the same token, I don't think we've had any apologies come through that I know of. Sprott Asset Management CEO Eric Sprott said silver is the investment of the decade. Not only is it likely to reach $50 an ounce by the end of the year, but he says over the next 3 to 5 years, its performance is likely to treble that of gold's. And he says, we've been huge proponents of gold over the last 11 years, and we've been involved in silver over the same time period. But beginning about a year ago, it became extremely evident to us that investment demand for silver was massively understated. This movement also appears to be occurring in India, where festival celebrants, deterred by high gold prices, have been buying silver ornaments as gifts. And he says, as a result, the ratio between gold to silver is likely to get back to around a more appropriate level of 16 to 1. It's currently around 36.5 today. And only in June of last year, it was sitting at 70 to 1. And according to Sprott, as he said, $50 this year, and he actually believes that we could see silver go north of $100 and get back to the ratio of 16 to 1. And that's something, Harold, and we have about 3 minutes left here, actually 2.5 minutes left in this segment. It's something that I'm proud of on our show. We really focused on the gold to silver ratio. Back when no one was really talking about it, it was something that I picked up on, and I put it in our newsletter as a guidepost every week. And it's something that people can keep an eye out for. The gold to silver ratio will guide us in the future. And when you start to get to a position of 16 to 1, you can start to see that the numbers work very favorably for silver. In fact, if we got to $2,000 gold, a 15 to 1 ratio would put silver at $133. 20 to 1 would be $100. And even if in the short term we get to that magic number of 1650, 15 to 1 would be $110. And even if we got to 30 to 1, it would be $55. So you can see, Harold, with about a minute and a half left here in our first segment, the numbers working in our favor, and we have used the gold to silver ratio as a guidepost and will continue to do so.
Oh, you bet, and it's extremely important. And that really comes from back in 79 and 80 when gold hit $8.50 and silver hit $52. So again, I do believe that the ratio will go back to 16 to 1. In actual fact, it's doing that right now. Silver has moved up 25% this year, and gold has only moved up fractionally. So again, we're starting to see the run in silver, and that's exactly what we thought was going to happen. And again, it's a phenomenal time for those that are in gold and silver right now.
To invest in precious metals, the only company that Harold recommends you deal with is Worldwide Precious Metals. They're out of Vancouver, a great Canadian company. That's who you want to deal with, a Canadian company. Keep your money in Canada. They've been around during the entire time of this bull market. They're experts in this specialized market. You want physical precious metals, not paper promises, ETFs, or certificate programs. They're there to help you, obviously, manage your precious metals investment account. You can trade the market if you want, buy or hold your metal. They're there to help you maximize profit, minimize the risk. And obviously, they'll go through all the different ways that you can be involved in this market. This is a liquid asset. You can buy and sell with a phone call, and I think that is very, very important. The telephone number, 1-866-623-2002. Call that number as well for our free weekly newsletter. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on April the 8th, 2011, at approximately 9:11. That is Mountain Time, 11:11 Eastern Time. Show runs on AM 640 in Toronto, 630 CHED in Edmonton. We're running a little early in Edmonton this week due to the final Oilers game of the regular season, and hopefully they get that first pick overall. Toronto just missing out on a playoff spot. So for Toronto and Edmonton, better things in the future for our hockey teams. To invest in precious metals, the website www.pmc.com, www.pmc.com, the telephone number 1-866-623-2002. To invest in diamonds, Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number to speak with Harold about diamonds is 1-800-432-1022, 1-800-432-1022. And in our newsletter this week, we have our rarecoloreddiamonds.com featured diamond of the week. This is a very rare 1.50 carat, long emerald cut, fancy intense yellow flawless diamond. Emerald cuts are a rare cut. Very seldom will a diamond cutter actually cut an emerald cut because a radiant cut is easier and there is less wastage, which obviously you want to keep more of the diamond around. They will only cut an emerald cut if it is an important diamond, and this one certainly is. You can speak with Harold about it, and you can see it in our newsletter and on the website rarecoloreddiamonds.com under Featured Diamond of the Week. There are two auctions coming up next week from Sotheby's and Christie's, and we will keep you to date on that next week. A fantastic article that I think is a must-read. Why are auction house diamond sales breaking records? And we'll maybe talk about this a little later on. I'll turn it over to Harold. But Harold, a fantastic article that is a must-read. And why are auction house diamond sales breaking records? People want hard assets. That's why.
You better believe it, Randy. And again, it's one of the best investments that you could ever make. Rare colored diamonds. We just talked about the gold-silver ratio of 16 and 20 to 1. As far as colored diamonds to white diamonds, it's 50,000 to 1. In fact, it takes 50,000 carats of white diamonds just to find one colored diamond. It takes 1 million carats of white diamonds to find one pink diamond. That's how rare these diamonds are. So even during the financial meltdown of 2008, you saw colored diamonds hitting records at auction, and that's primarily because with the world financial markets the way they are at this point, with countries going bankrupt, with currencies going under, and changing so abruptly. We saw during the crisis with Greece and all that, before we saw the euro drop 30% in 1 month. You don't want to have all of your assets sitting in one area. You need to have something that is a hard asset that is portable and private, and that's always been what a diamond has been. In actual fact, rare colored diamonds have never ever dropped in price. Certain diamonds, like yellow flawless diamonds, which I think are amongst the best diamonds that you could ever buy, but they've got to be yellow flawless, either the fancy yellow, fancy intense, or fancy vivid. Those diamonds go up by at least 25% a year. In actual fact, we're going to see a 35% increase in yellow flawless diamonds by the fall of this year. And the reason for that is